stop loss procedure as far as trading the breakout pullback continuation pattern. You are to place your stop loss above the pullback aspect, meaning right there. You've seen me, guys, trading this type of patterns over and over and over. So if your stop loss was to be placed up there, this fake breakout candle certainly would have stopped you out. A number of traders got stopped out right there, but immediately after, as you see, price came back down and closed below the below the resistance level, and effectively transforming that inverted hammer into a fake breakout inverted hammer. You know how to trade that, guys. Bet or try to squeeze profits in the opposite direction of the actual fake breakout in the continuation move. Okay? Well, price, as usual, moves in repetitive patterns over time, and the very same thing happened right there, which is, by the way, the trade that I took. I didn't take this trade, all right? That's not the trade I took. I took the trade based on this inverted hammer. So at this moment, price already broke again this level of support. Therefore, the downtrend was in place. I draw my trend line, nice breakout candle. I was searching for opportunities to trade to the downside, okay, since this former level of support had given way in a beautiful, long, powerful red candle. So it was just a matter, I'm gonna delete this one, it was just a matter now of finding the appropriate time to enter short in this market. Okay, so now that this level is broken, let me delete that. And now that I had this trend line in place, okay, take a look at what happened here on the next swing up, on the next retracement. Another fake breakout candle, this time around breaching through the trend line. But as it came out to be, price came back down, closed that breakout candle below resistance level, and just as it happened here, the next immediate move usually happens in the direction opposite to the breakout to the fake breakout. Okay, pretty much the same thing there. All right, you see how price patterns repeat over and over and over themselves over time. That's basically the very basic concept behind technical analysis. Analyze price action because it usually repeats itself, and therefore it gives you hints on the upcoming move based on price patterns that have proven to work over and over and over, time and time again, through history. Okay. Moreover, if you want to get, if you want to draw some Fibonacci levels as well from this swing down there, you will see that the retracement went all the way to the optimal level, which is, in my opinion, between the 38 and the 61% Fibonacci retracement. I also mentioned this on previous videos elsewhere on the site, okay, on other tutorial videos. I usually like to see, ideally, these pullbacks falling somewhere in between the 61 and the 38% Fibonacci. Right there. Okay, so this was certainly a valid pullback in my eyes. That fake breakout again gave me another hint that the next move was going to be to the downside. That solid breakout that we had previously seen kind of told me, kind of hinted me that the downward pressure in the market was stronger than the support levels, okay, and therefore price was to continue moving to the downside. So let me zoom in once again. As this fake breakout candle closed right there, okay, right there, I placed my entry immediately below the low of this inverted hammer, with the stop loss taking the whole range of the fake breakout candle. Okay, that would be more or less the 50% range. I placed it a few pips above, somewhere around there. The next immediate candle, as expected, moved in the opposite direction to the fake breakout, triggering my entry. Okay, it ran all the way down. That was my first target, and in theory my second target should have been at the close of the next candle, right there. But since I had support there from the previous swing low, okay, from this swing low, okay, right there, what I did was to close 50% of my trade there. I also closed another 25% of my trade just immediately above this specific support level, that previous swing low, okay, right there is where I closed another 25% of the trade, and then I left the remaining 20% of the trade run all the way down to the close of that monthly candle, okay. So this trade run for all in all for 2 months, and that's exactly why, well, you know, who feels like keep on updating the same video for 2 months, right? I certainly didn't, so that's why I don't have a live video to show you guys for this one. Sorry about that. But anyway, like I said before, I believe it's a very nice educational example on prototypical price action reading, especially prototypical fake breakout type of trades. And now, take a look at this. We have former support there on the previous swing, okay? Price broke below that level, another nice breakout candle, full body, hardly any wicks either to the upside or to the downside, so effectively a nice breakout in trading volume, breakout, pullback to retest support levels, okay, both the resistance levels, so both the trend line and also the previous swing low, and now seems like price is moving to the downside. And guess what, as long as this downtrend is in place, I'm going to keep on searching for short opportunities. And here, this is the monthly time frame. If I don't feel like taking trades based on such a long-term trend lines, hey, it's totally okay. You are very, very welcome. In fact, you know, it's actually a good idea at this junction of the chart to zoom into the weekly, to zoom into the daily, even in the intraday charts if you are an intraday trader, all right? And begin searching for short opportunities, because price action in the long-term charts, in this case the monthly time frame, is telling you that price keeps on going to the downside, okay? Nice breakout, search for short opportunities, ride it all the way down for as long as you can, another level of support, another breakout, solid, valid breakout, the trend line is still in place. What do we have here? A breakout, pullback, and now it seems like we are starting to go through the continuation part, right? Right now we are printing another red candle there. So hey, you know that the market bias for the euro against the New Zealand dollar in this specific currency pair is in the long term pointing to the downside. Okay, you again know that the bias is to the downside. So why not zoom in into the shorter time frames and search only for short opportunities, knowing that the wave, the momentum, okay, the inertia of the market is certainly pushing the euro to the downside. Profit from it, okay, profit from it. Doesn't matter whether you're a long-term trader, medium-term trader, or even an intraday trader, all right? You want to bet in the direction that the long-term technicals, as you can see, are telling you. And they are telling you that this chart is pointing down. If it's pointing down, you want to trade down, regardless of if it's based on long-term signals or intraday signals, if you so wish, if you are so inclined to be an intraday trader exclusively. I personally like to trade both intraday strategies and long-term strategies. Why not? Okay, if I get a trading signal, I will trade it no matter the time frame. But hey, if you want to exclusively focus on intraday charts, do so, but always keep in mind the long-term outlook, the long-term bias. Okay? All right, guys, that's all for this video. Cheers, bye-bye.